What's up, Aurox Nation? It's your man, Joe Blackburn. We got special guests today, but first off, joined with the man himself, everybody, Giorgi, the CEO and the founder of this great project alongside. Ross is not with us today, but I can't start this off without mentioning good old T. But our special guest today is Tushar. He's out of Persistence.one or Persistence. We're going to talk a lot about what we're doing, what he's doing, what we're all doing in this space today. But most importantly, we're going to dive into a little bit about all the intricacies and all the details about what Persistence is doing to make this space a little better. But Giorgi, what a day, man! This has been quite the week, has it not? Between Doge and Saturday Night Live and Shiv and Tushar, I don't know how much you were paying attention to the American pop culture over here, but it's been a little bit of a wild run, and I know it's been pretty mainstream news. But Giorgi, you been having fun this week or what?
Yeah, it's been insane. I mean, checking some of the top coins that were trending, you kind of don't know.
Say it out loud. Joe was right. I've been subtly mentioning Shiba Inu for almost a month now, and say all you want, and you can make fun of me, but it did well, and it did very well for all the people who were paying attention to some of the things I said. But Tushar, how about you, man? Did you dabble in the Shiba at all?
Not Shiba, but I mean, definitely been following what's been happening, in the space in general, and I think American pop culture is, it's not just American. I think it's fairly global. So definitely fairly plugged into what's been happening.
Fair enough.
Yeah, and it's definitely interesting, crazy, scary. Yeah,
it's a good time to be in crypto. It's a good time to be in crypto, but nevertheless,
without
look, as an American in crypto, sometimes I don't know whether to assume people know what's going on in America or not assume, because you don't want to sound like that cocky American. And there's a large audience that's not American with what Aurox is doing. So, but anyways, moving on before I digress into something that Giorgi's going to beat me up for. We can go ahead and move into the main topics with this. But Giorgi, I'll kind of let you take it from here, brother.
Yeah. So Tushar, I just kind of wanted to get an idea, and our audience wants to know as well. Can you describe what Persistence is doing? I know you guys are trying to bridge the gap between traditional finance and the on-chain DeFi and NFTs and stuff. So just kind of wanted to get a background about Persistence.
Yeah, I mean, I guess even before going to Persistence, a quick background about my sort of journey in the space. So prior to starting Persistence, I was the first employee at Lunex Ventures, which is the crypto arm of a traditional VC in Singapore called Golden Gate Ventures.
Wow.
And so back in 2016, Golden Gate had invested and done an equity investment in a company called Omise, which ended up being the Omise Go token, OMG.
Oh, yeah.
Yeah.
So that's actually called Omise. I always thought it was Omise. Okay, that makes sense.
Yeah, it's Thai. It's Omise. Okay. Yes. And so Golden Gate was focused on the Southeast Asian ecosystem. That's how Omise happened. And Omise is essentially the parent company, but the fund mandate didn't allow them to invest in the token. And that was kind of the genesis of a dedicated crypto fund, where I was the first employee, did everything from like fund incorporation to fundraising, and raised capital from a publicly listed company in Japan, the VC arm of a Southeast Asian sovereign wealth fund, multiple family offices all across Southeast Asia. And this is all back in 2018. Worked with multiple service providers where we had to literally beg them or convince them to work with us, whether that was like opening a bank account was a hassle, working with lawyers, tax advisors, fund administrators, cybersecurity consultants. So did all of that. And then deployed capital into 7 equity companies in the crypto space, mostly infrastructural stuff. So like crypto exchanges, custodies, solution providers, wallet service providers, KYC, AML solution providers. And then did a bunch of investments, both on the primary side as well as secondary markets. Did exceptionally well. At the fund is still holding on to a lot of the positions that we had. Had a sub $100 entry into ETH, sub 4K entry into BTC, sub $10 entry into BNB, and still holding on to most of those positions still. My thought process was that I wanted to be. If we take a step back and look at the sort of broader startup ecosystem outside of crypto, the US has the largest number of unicorns, followed by China, followed by India. in the traditional startup space. My thought process was, I was sitting in Singapore, had built a fairly global network, fairly global, but still kind of focused on Asia, so Korea, China, Hong Kong, and then certain parts of South Asia. So my thought process was that how can I leverage the access and availability of talent in India, along with the sort of global network that I had built, whether that was from a capital formation perspective or like serving the global crypto capital markets perspective. So that's how I always also wanted to kind of move over to the dark side of building something rather than just purely being an investor. And so over a period of time, kind of formed a team, and that's how Persistence was born. We kind of high level, you talked about what we're doing at Persistence. High level, kind of we can break it down into two categories. One is kind of the stuff that you mentioned about bridging traditional finance and DeFi, that is more on the real world asset tokenization side, which is Comdex, which I can speak about. And then the second product is it's a very crypto native problem, which is essentially liquid staking, where we're essentially trying to bring POS assets, proof of stake assets, into the DeFi ecosystem so that you can have staked assets, which are accruing staking rewards, but still use them as collateral to facilitate borrowing lending. So like taking your DOT and while earning staking rewards in the background, use it to take out a USDC loan, for example.
Sure. Let me interrupt you. I apologize, but let's talk about that for a second. Who's your primary customer, I guess, per se, or who's the primary user of this platform?
Sure. So, I mean, again, like I said, there are two platforms. One is geared 100% towards institutional users.
Sure.
So Comdex, which is a physical commodity trading platform and trade financing platform, is geared towards institutional commodity traders, usually based in the 4 commodity trading hubs in Asia, which is Singapore, Hong Kong, Kuala Lumpur, and Dubai. It is not a crypto-facing product. It is a traditional.
Sure. Which is the future of the blockchain, by the way. You're using the blockchain and you don't even realize it. That's the idea, right?
Yeah, kind of like NBA Top Shots, right? Like you're using it, everything's happening in the background,
sure.
but you don't know.
It's irrelevant. Yeah, it's irrelevant to the actual user.
Exactly. And
I'm gonna miss those days when the crypto markets just don't exist. What are we gonna do, Giorgi? I don't know. Right? That's a joke. I don't think that will ever end. But sorry to interrupt. Sure, go ahead.
The madness won't end. And then so essentially, what our thought process was that, and kind of following, if you follow Terra's journey, right? So Terra Luna, which is performed fairly well, South Korean based project. They have Chai as their non-crypto user-facing application, where they facilitate e-commerce payments for a fraction of the cost that normal payment service company providers do for e-commerce companies. But I think Terra was facing a similar problem that we were facing, that you've delivered value, but because crypto folks cannot tangibly use or see what you have built, it becomes very difficult to capture their mind share. And hence Terra kind of came up with other sort of complementary products like Mirror Protocol, Anchor Protocol, which have all done phenomenally well, which are very crypto native user facing products. So that was kind of our thought process as well, that while we're chasing a longer term vision of trying to solve quote unquote
Sure.
real world problems, we also create certain products that allow us to capture the mind share of a normal crypto trader.
You mentioned Singapore and Hong Kong and India. I'm sorry, George, I don't know if you're about to say something, but is this your primary market at the moment as far as geolocation? Or, I mean, obviously this is a worldwide effort, but in India, I know there's been some pushback against the crypto world per se, but not necessarily against blockchain. I guess it's just more about the trading and the coin value, et cetera, that aspect. If I understand correctly, please correct me if I'm wrong. But is this primarily going to be an Asian-centric market that you're going to expand from that, or are you all over the world at the moment?
I mean, the most beautiful thing about crypto is that, you're, again, with Comdex, which is our, traditional finance product, that has more of a geographical focus,
Sure.
which is, Asia. But with crypto native products, I mean, you don't really need to have a, geographical focus. I mean, the world is your target market. So our investors are global, our validators are global. We have global communities. Our users are global, our stakers are global, our delegators are global. And so it's like, you're building a global company from day one.
And so going back to the staking aspect of it, can you explain exactly like, so I'm holding some token, for example, I'm earning rewards. Your system will allow me to kind of stake it even more to get, or not stake it, but use it as collateral to withdraw money in essence, like a stable coin. Is that correct?
Yeah. So, high level, first of all, I think one thing I want to clarify is that a lot of folks that are now staking different kinds of coins don't understand the difference between staking at the DeFi level or at the application level and staking at the protocol level. So with ETH2 going live, you're actually staking at the protocol level. What that means is you're actually being part of the consensus. When you stake your Ethereum to secure ETH2, you are essentially doing what the miners do today. Within the Ethereum ecosystem. So you're actually being part of the consensus. Whereas staking at the application level, so if you say you use Alpha Finance contracts, or Aave, then it's purely from a yield perspective. It's purely to align the incentives of the users of the application and the liquidity providers of the application. What we're focused on is all of the protocol tokens, all of the proof of stake tokens, which includes Atom, Dot.
Basically, the tokens that have their own chain. In essence.
Exactly. And so it could be, Avalanche, it could be Near, it could be Solana. These are all protocol tokens, and usually you stake these tokens to earn a staking reward, which is essentially inflation that the chain pays out. This is the same thing that the miners get paid today, which are like block rewards, and for both BTC and ETH, which are POW chains. But as the transition happens to POS chains, you can stake your Sol, you can stake your Dot, you can stake your Atoms. But if you stake them, you earn about 7 to 13, 14% rewards, but your assets are stuck, right? You're earning 7 to 14%. It's not bad, right? But your assets are stuck. What we do is we basically issue a representative token, which gives you the ownership claim to the underlying token, which is actually staked. But this representative token can then be taken in the DeFi ecosystem, and then you can plug it while you're earning staking rewards in the background. You can plug this representative token as collateral and then borrow, say, USDC. And then you can use the USDC to, say, leverage up if you want to. So you can buy more of that asset, and you can do whatever you want with that USDC. So it allows you to keep earning rewards in the back, but also use the same asset for other things. If you sell off that representative asset, then whoever you've sold the representative asset to then has ownership claim to that underlying staked asset.
So what happens with if the price of that token drops below the value of whatever you've borrowed?
Yeah, absolutely. And so essentially the exact same mechanism of a liquidation would happen, and then the representative coin goes to the folks to whom the auction has been done once the liquidation has happened, and then they get to claim the underlying token. So essentially, whoever has the representative token essentially gets to claim the underlying token, and these tokens are say pegged 1:1. I don't know if you've heard of Lido Finance. They just raised $73 million last week from investors like Paradigm, Jump, Three Arrows. Lido is doing exactly that for ETH2. And Stuffy Protocol, another project that is doing the exact same thing. A few other projects out there, Rocket Pool, a couple of others.
But you guys are bridging different chains, right? So whereas they're working with a specific chain.
I think at the end of the day, all projects want to bridge multiple chains because essentially
there's more audience.
Exactly. Absolutely. And look, I think even if we go before going into that as well, right? Like the POS market is heavily underrated. in the sense that, people talk about, TVL and DeFi. You look at, TVL, last I checked was about 75 billion. With ETH going up, might be around 80 billion in terms of TVL within the Ethereum DeFi ecosystem. The proof of stake market cap, if you go to stakingrewards.com, is, I think it's about, the last I checked, obviously prices have been fluctuating massively. But 2-3 days ago, I checked, it's about $634 billion, out of which $120 billion has already been locked up at the protocol level and is participating in consensus. Yes. So if you look at that ticker at the top, scroll up. If you look at the ticker at the top, let it flow. So crypto market cap is 2.1 trillion. The staking market cap is exactly $633 billion dollars. And if you if you move your mouse again, so locked in staking, $146 billion out of the 633 has already been locked up in staking. Now these are numbers that, so essentially people who run validators, and Persistence itself, one of our subsidiaries is Audit.one, which is a validator service provider. And as far as we know, we're the largest validator in Southeast Asia and South Asia. We secure more than $300 million of POS assets across multiple chains. It is an unsexy business. Like, no one talks about running validators. People talk about DeFi, people talk about buying, but the market size is just humongous. And, the thought process behind starting Audit.one was that, I got into crypto in like late 2016, early 2017. It was too late to get into Bitcoin mining or even Ethereum mining. And so I was like, what is the next thing that you can do? And proof of stake was it. And then, Tezos and Cosmos were the first two POS chains in production. And so we bet on them and essentially started running validator nodes, which allowed us to learn about POS mining and how things work at the POS protocol level. Which then allowed us to understand some of these very unique problems that exist within POS, within the POS mining market. And then we ran a stake drop campaign late last year where stakers of Luna, stakers of Atom, stakers of Kava would receive a very targeted airdrop of the Persistence token. And so within a 3-month period, we had more than $980 million worth of staked assets that were participating in the stake drop, where honestly speaking, the upside was not even that high. But we just saw an insane demand, which basically gave us a view into what the market was looking for, which is to generate additional yields from assets that are already staked, and figuring out newer ways to generate yield. That's how this liquid staking application, which is pStake, came about, and so we've been working on it for about 6 months. In parallel to our kind of real world asset tokenization product. Sorry, I know you've been wanting to ask a question and jump in, but I've been going at it.
No, I understand. Like, I understand being so fired up about your own project. So I completely understand that. I just had a couple of questions. So as far as pStake goes, how far you guys are in development right now? Is it live or is it getting close to launching?
Yeah, so it's getting close to launching. So we're just getting security audits done. The development is complete. It took us a while. I think a lot of security auditors are in huge demand these days, as you might expect.
Yeah, it's insane.
And so it's very tough to block their time. And so essentially, we're at a stage where the security audits are happening, and hopefully, the response from there is fine. And then obviously we'll have to make some changes based on the feedback, but we're sort of targeting like an early to mid-June launch for our V1.
So Persistence is its own chain, right? Like it's running on its own. So
how it's a Tendermint-based chain. Yeah, it's a Tendermint-based chain. It's a Tendermint-based chain. So it's the same infrastructure on which Kava, Band, Injective, Crypto.com, Binance Chain. So they all use Tendermint in the background.
Okay. So it's the same language and everything that's kind of utilized, correct?
Yes. So, essentially Tendermint was something that was, created by the Cosmos folks. So similar to how Polkadot guys created Substrate, if you've heard of Substrate. So Substrate is the underlying, consensus layer. underlying consensus layer. And so Polkadot was built on Substrate, Cosmos was built on top of Tendermint, and Tendermint is open source, and so anyone can use it. So the Binance chain, OK chain, KuChain, Crypto.com chain, Injective protocol, Kava, Band, Terra, they're all using Tendermint in the background. It's just that they don't speak about it. And so we've been using Tendermint as well in the background. But for now, our real world asset application is running on that chain. But for the liquid staking application, the initial asset issuance is going to be ERC20 based coins. In the longer run, we might do asset issuance on our chain as well. But because the maximum amount of liquidity and composability exists within the Ethereum ecosystem, we want to kick off. And this is a strategy that Terra adopted as well, where for Mirror protocol, where they were issuing synthetic assets like M Apple and M Tesla, which were basically synthetic shares, synthetic stocks. You could choose whether you want to create it on Ethereum or the Terra chain. So that's exactly what we're doing as well. High level, you have the BTC maximalists and the ETH maximalists, and from our perspective, we're not any maximalists, right? Like, we're not even persistence maximalists. We just are believers we're interoperability maximalists. We just feel asset issuance is going to happen on multiple chains, and we want to go essentially wherever there is liquidity and users.
Tushar, I got a question for you, and I know your time's limited. So, and by the way, for everybody listening, these two dudes are way too smart for me. I'm just sitting here like pretending I understand. Tushar, you're a genius. I know that. I can tell. And I appreciate all this information that I don't understand. But nevertheless, one of the things, and obviously I'm joking to an extent, not really, but the concept of this is really, it's against traditional finance. Like, although you're including yourself in traditional finance, this is not something the banks are going to like, and it's similar to other things that are happening in blockchain and crypto right now. Have you had any pushback, or have you felt any pushback from the outside world, the traditional finance?
Not particularly. I mean, essentially, even on the traditional side, the problems that we're solving, essentially, I don't come from a commodity trading background, nor do I have networks in that industry. We just work with folks who have those networks and expertise, and so which is essentially family offices in Asia. And unlike North America, most businesses in Asia is family run, as opposed to being run by large corporates.
Yep.
And so on that front, nothing, because you have the backing of the right stakeholders. And so if they support you, then there's no pushback, because they are the ones that are able to open up doors for you. In terms of our crypto native product, I mean, we're solving a problem that is very specific within mining, or within specifically proof of stake mining or staking. And so that's a very, very specific problem, which I don't think the banks care about yet. But what will happen is, say 12 months from now, 18 months from now, when ETH2 actually goes live, and say ETH hits,
$150,000.
I mean, like once the ETH market cap becomes substantial, not that I'm saying it's not substantial already, but once that happens, it's banks will want to run validator nodes. It's already happening, right? Deutsche Telekom is running validator nodes. Banks are going to want to run validator nodes. Entities like PwC, KPMG, consulting firms, McKinsey, BCG, they'll all want to run validator nodes because
it's easy money,
free money.
Yeah, and they have brand names, right? They have credibility.
Mm-hmm.
And
it's going to skyrocket the prices of these coins too when this happens. I mean, it's going to go absolutely ballistic, especially ETH.
It's going to happen, right? It's inevitable. And whether that
why wouldn't they?
Whether that's, I mean, because it's like I was reading, like I didn't know this, right? It's like, I think being in crypto makes your judgment for numbers very fuzzy as well, right? So like,
absolutely,
I just found out that the market cap of Barclays is like $35 billion, right? Like this is a 100-year-old British investment bank, and
one of the most respected in the entire world,
and the market cap is 35 billion, right? It's like I'm sure there are 3-4 massive Bitcoiners who could get together and just like be like, we're going to buy Barclays.
Yeah,
we're just going to buy Barclays.
Bitcoin now.
And that's absolutely mind blowing, right? That is ridiculous to me, right? And so our sense of numbers, as investors, as founders in this industry, is just absolutely skewed, right? Like it's just insane.
I also don't think our numbers are real numbers anyways, though. Like our market cap numbers are so fake. It's not, it's just, you could literally just one person buys it for $1 million and then it's like a $1 billion market cap. It doesn't matter. I mean, it's not a fair assessment to our actual valuations for these projects.
But you forget newer projects, right? Just look at BTC ETH itself, right? I mean, that is like what, I mean, if we do the, combined market cap of, BTC ETH, that itself is almost $1.5 trillion, right? So, I mean, if a traditional player was to get involved in just Bitcoin, Ethereum, I mean, $1.5 trillion market is, it does not remain a joke anymore. And those are not fake numbers, right? That there's volume there and there's liquidity there.
Sure.
And so I think from that perspective, a lot of the traditional folks will get involved. Staking to secure chains will get more popular. They're going to be more and more like just the development of how POW mining has evolved, right? Where you could just like mine on your like laptop or computer back in the day to now requiring like specific specific infrastructure to be able to mine BTC. We'll see developments and optimization strategies within the proof of stake world as well. We don't even know how that space looks like, but it's a fascinating space again because like I wasn't there to mine Bitcoin early, wasn't in the space early enough to mine BTC, but now it's like like you don't want to work on something that has already been hot, right? Like you want to find out, okay, what's going to be big
next?
12 months from now, 24 months from now, because most people like even NFTs have been cool for about 3-4 months, 5 months, but the people who are actually working on it for the last 2 years are the one who were able to capitalize on the boom from NFTs. And then obviously you have the opportunists come in and like try to make a quick buck also. And so you have all kinds of stakeholders. And so,
but see, on that note though, Tushar, and I'm sorry, I keep interrupting. But
no worries, man. I appreciate that. Yeah.
So, and I agree with you, by the way, completely. You're exactly right. But my concern is that there's always companies working really hard. And unless you're decentralized, truly decentralized, which is very hard to do, even in crypto, right? Then all these companies are subjected to, the potential of being bought out. And every man's got his price. I've always said that, and I mean, including me, as much as I'd like to say I wouldn't, you offer me all the money in the world, you're getting it, right? I mean, not much I wouldn't do. There is, but there's not much. But obviously another joke. But to my point is that when we see these major institutions start taking this very seriously, and I still feel like they're not taking us seriously in a lot of ways, which is a huge mistake. But when they step in, they got a lot of money and a lot of infrastructure and a lot of, most importantly, customers. So what concerns me the most, and this is not to say that this is a answerable question, but just a concern I have just in general is that we're going to lose out to the major players because they're just letting us kind of make all the mistakes. And then they're going to come in and just backhand us, get out of the way, right? And so that scares me. What are we going to do about this? How do we actually, how do you guys intend on combating that? I mean, how do we onboard these customers to see us as that Barclays instead of going to Barclays to do this once they decide to do it? And I know that's a hard question to answer. Feel free to tell me I don't know.
Yeah, no, I mean, I do have views on that. And see, the thing is, what you just mentioned was funny because, as you talked about us becoming the Barclays, right? And then you talked about decentralization in the same sentence, which is, kind of funny because essentially the point of centralization is changing from Barclays to you, but it's still centralized.
Yes,
But see, the thing is, and that's what happened. If you look at what happened, what the internet did to the media industry, right? So back in the day, before the internet, you had a few folks owning newspapers, you had a few folks owning radio channels, and essentially what the internet did was create newer entities that could do the same, right? So Facebook as a platform, Instagram as a platform, social media. And so essentially what happened with media was that the point of centralization changed from newspaper owners to tech platforms. And now what crypto is doing with money, what the internet did with media, was that maybe the points of centralization may change, but decentralization at some level is a meme. I mean, if you're truly honest,
I agree.
right? Like,
I completely agree. It's very, very hard to combat.
To implement.
Yes.
Yeah. I mean, you talk about MakerDAO, which is the most used DeFi product today, according to DeFi Pulse and in terms of TVL and things like that. And there's less than 100 people. I think I haven't checked the exact figures, but there's less than 100 people that I think own more than 70% of MKR. And so, I mean, again, this is obviously something.
When there's money involved, it's always you're gonna have people up top that are gonna be accumulating the majority of the stakes.
And to Zach's point down below in the comments, I don't know if you saw that one, but he said, "Are they not taking us seriously, or are they not letting us know?" And that's a great point, Zach, because I agree that they probably are taking us more seriously than the outside appearance. Go ahead, Tushar.
I mean, that's exactly. Sorry, go ahead.
Go on, man. Sorry.
Oh no, I was just saying they've definitely. I think they've already taken it seriously. They're just not letting us know. Ethereum and all the big BTC and everything that's pumping, they accumulated back when it was $3,000, $4,000, $5,000, and now it's. I mean, the ones that are already telling us that they bought BTC. What is this? Grayscale. They bought so much BTC. They're actually being transparent with it, but
they have to be legally. They have to legally do that. Now, does that mean they always follow the rules? No. But for those of you, though, I'm going to go Alex Jones for a second, and I'm going to tell you that the Fed is pumping Doge right now. I'm calling it Dodge because they want to dodge it. They want to dodge the crypto market and steal our money back. But the Fed is pissed off because they had to print all this money because U.S. can't get their shit straight. And now, well, maybe they're not pissed off. They're enjoying it, but now they want their money back. So they pump Doge, and then they're going to take it all.
But yeah, I was talking to a friend of mine, and he was like today, and he said it's like stuff like Doge that, again, to an outsider, things seem sketchy again, right? Like, fine, like people on the inside, like they make a buck, but from an outsider's perspective, the way Doge went up and went down with like absolutely no development in the last few years. From an outsider's perspective, it's still something that's like my dad's childhood friend. Like, my dad is like more than 60 years old, from like a tier 3 city in India. He's created like a crypto account and is buying Doge, right? Like that scares the fuck out of me.
I completely agree.
Well,
right? It's like.
The thing is, like, those people that are, I read a comment the other day that was like, it was like talking about the same thing. And he said, I got involved into crypto when I first bought Doge or whatever. So I think all these people that are buying it now, looking at TikTok and stuff, and they're downloading Trust Wallet for the first time, or trying to exchange Shiba and all these. I think some of those people are gonna stick around because they're gonna get a little more like, what's going on over here? What are people doing? Yeah. But at the same time,
it's dangerous, man, and it opens the door for as a U.S. citizen. It's an open door to regulation that's going to just to me open up the nuclear winter. Hopefully, it doesn't. I mean, I'm not trying to put this on us, but and this is where things that you're doing, Tushar, are so important, is to bring that credibility to the space when we have such problems right now, like essentially like Doge. I mean, like Doge is a problem in my opinion. I agree with your point, Giorgi. It's going to bring people to the space. It's going to add money to the space. Clearly it has. You've seen all these other coins go up because people are taking profits on Doge. A majority of the money will stay in crypto, I think. I don't think it's all coming back out. And as long as products like Robinhood exist to allow people fiat on ramps to at least the idea of crypto, it's not true crypto as we all know, then that's going to improve the space. But again, going back to the entire point of this conversation is with what Tushar and Persistence is doing. That's credible. That's a real product, and that's really relevant in today's day and time. And crypto is only becoming more and more important to the use case of the world. And I know I brought up being an American citizen at times, but the Americans forget that there's the rest of the world, right? I mean, they truly forget that the world exists outside of these borders, and when that happens, these Americans they forget that the use case is substantial in about 60% of the world.
And again, the point that you touched upon, which is, I think you were getting towards banking the unbanked. I think that is another meme, right? Like 95% of finance is not outside of just basic, savings and loan products and payment products. 99% of the structured products that are out there is not used by the everyday person. Sure. These are complex financial products that are used by large corporates and high net worth individuals to make more money or hedge their risk.
Sure.
And so the whole banking the unbanked in crypto as well, it does help. Like if you're in India, you can't buy the S&P 500. It's very, very difficult to get exposure to the S&P 500. If you're sitting in China, it's very difficult to get exposure to S&P 500 or Tesla stock or Apple stock. Yep. Now using something like Synthetics, which is a DeFi product, Mirror Protocol, which is a DeFi product, you can get synthetic exposure to these stocks. But it's not your random everyday person who's getting exposure to these stocks. It's not, it is still folks with surplus capital who can take that risk and who have that risk appetite to invest in such stocks and financial products.
I agree, but I will say this. You get a lot of people who, like, let's just take Zimbabwe. I use this as an example every time I talk about this. And they have a $100 trillion bill. A $100 trillion bill, right? And that is $100 trillion is a US dollars is it's beyond comprehension, honestly, because every trillion has 1,000 billions, and every billion has 1,000 millions, and this is a lot of money. Okay, so when you have a $100 trillion bill as a Zimbabwean, and you can't even buy a Coca-Cola, it's worthless, and it's worthless because every time these people saved $1 in Zimbabwe, they printed enough to get to a $100 trillion bill. And to me, when we hear that banking unbanked, which is not against your point, it's actually includes it. It's just an idea. It's a concept that this doesn't have to happen anymore. And that's where I think, as a culture and a society inside the crypto culture, is what I'm speaking of.
Yeah.
That's the banking the unbanked, in my opinion. It's stabilizing people's, at minimum, stabilizing their income. Even in the volatility of crypto, it's nothing like the volatility of the Zimbabwean dollar, which has only gone down. And I think that's such an enormous point that's never happened before. And then Americans are going to go through our little inflationary period now, right? We've been printing all this money because of the haunted and the vaunting and the beautiful and nasty and terrible situation that we're in, depending on who you are in this country, because a lot of people are getting really rich right now. There's so much to say about the point that, again, and this goes back to the credibility you and your company are giving to the crypto space. Is it's about time that we have some things that give us the opportunity to really move forward. Now, I want to go back to market cap real quick, because before you have to get off, I wanted to make sure that we talked about Giorgi's $1 billion challenge. So when Eurus gets to $1 billion, we're literally going to tattoo Giorgi's face with the Aurox bull symbol. We haven't decided if it's going to be on the left or right side, right, Giorgi?
We'll see.
We're not going to see nothing. Actually, we're going to see it for sure. You're right, but we're not going to see you see. We're going to see us tattoo you. I'm going to hold you down. Taras is going to be the one that. I hope Taras can draw.
I'd rather go somewhere and get it done professionally.
Nope. I bet there's somebody in the Aurox community. If there's not, there will be by the time there's $1 billion market cap. I promise you.
All right. So there was another question that I wanted to add that Thanos had. Assuming that hyper or high inflation will start to kick in as we see commodities already skyrocketing, how do you think this will affect crypto short, mid, and long term?
Yeah, I mean, that's such a difficult question to answer, and I wish there was an easy way to answer it. But
you're really smart, Tushar. You got this.
Look, I mean, I don't think crypto has it follows its own market cycles as well, right? Which is obviously following the Bitcoin halving, and so there is obviously the correlation to the global capital markets, which themselves are overextended, but which can remain overextended for long periods of time as well, depending on how much more money is printed.
So true.
And and then of course, if you run the data back, and just do very, very high level analysis as well, I think like this bull market should sort of extend to, say Q4 this year or Q1 next year, just historically speaking, which is about 18 to 22, 23 months post the Bitcoin halving, which happened in May last year. So although I go on Twitter and shit is just so bullish, but I think this is
euphoria phase.
Yeah, but I don't think we've still seen the top, because the top is pointed. Top is pointed, right? Top is not like growing organically slowly with pullbacks. Like that's not a top, right? That's just healthy.
But every time it like drops like 10%, everyone's like on, is this the bear market we're entering? Everyone's like looking at that,
Yeah, but I think the smarter folks, they every time, and that's why it pulls back up as well, right? Because every time there's been a drawdown, it just gets bought back up so quickly.
It's so beautiful.
Yeah,
I want to have babies with those bull markets. Have my children.
Yeah, I mean, what people say about. I mean, so I think my kind of short to medium term is that I think it's exceptionally bullish, but I think post that we'll just see how the market cycles. This history repeat itself with the cycles. What happens in the global, like tomorrow tech stocks fall 5%. Obviously crypto could fall like 10, 20%, if not more. So again, there's just so much, uncertainty. Obviously people who've been in crypto are sitting in like deep profits. So like tomorrow you're down 50% as well. I think a lot of people who've been building positions, they're like, yeah, that's fine. I can deal with that. Unless you're leveraged up, that's obviously an issue. But yeah, so like, don't have a good answer. Am I building up some positions? Sure. But like, it's like mostly very, very, safe stuff. And then just working on the, the business.
And I think that's a very reasonable answer, Tushar. And Giorgi, I'm sure you have some thoughts on this too. So before I'll sandwich myself between the two geniuses here, but I really feel like and I agree with you, Tushar, on the time frame. I do think Q4, Q1, 2022 is where we'll start to come back down. But I do feel like that this is going to be a little bit of a warmer winter here. And the reason being is because I do think if we can sustain that kind of success and publicity the way we have this go around, that we'll see a lot of these hedge funds and a lot of these 401ks and a lot of these retirement, and really just any savings account that's mixed up with other, not savings account, any commodities account that has the ability to add any crypto alongside with it, even if it's just 1%, of your 401k. Think about how rare Bitcoin becomes, right? And when Bitcoin is that rare and it's that high, it maintains the confidence in the rest of the market. Not to mention, I don't think ETH is even close to its top. I think we're well on its way for its mirror of Bitcoin 2017. And then, I think I remember, Bitcoin hitting around November of 2017, like 7,000. Well, we're ahead of that time frame at the moment, especially considering that ETH was at one point $100 earlier, in the cycle. So I personally believe that this bull market may not be stoppable if that's what happens at the confidence extents.
But that's how you always feel in a bull market. That's how I
feel every day, even in a bear market.
But I think the difference now is, when we saw the crash from 20,000, in 2018 and stuff, the difference between that then and now is people are kind of taking it more seriously. Like it can recover. Yeah. After a huge crash like that, everyone's looking at this like, okay, it can recover in the future. So when it drops from we hit $100,000 and it drops back down to 50,000, I think people are going to start accumulating it because they're going to it's going to recover one day.
Yeah, and absolutely, and also I think like a lot of people with PTSD from the previous bear market, they're a lot more careful, and they're taking profits along the way, and so there's always like capital on the sidelines to be deployed, and the capital base is increasing as well, right? Like someone who's running a $20 million fund is now running a $200 million fund. The Silicon Valley based, $200 million funds have become $2 billion funds. And they're just going to raise more and more capital. There is more and more institutional demand from sovereign wealth funds, pension funds, hedge funds, to these VC funds that have been managing money and have managed to grow large amounts into do 10x's on those. So there's a lot of pressure from like up top, which is like the sovereign wealth funds, pension funds, to the VC funds. These VC funds then put pressure on the entrepreneurs to like take more and more capital. It's literally how venture capital as an industry works as well. Yeah, like no one needs to raise $150 million to like run a crypto startup, but like people do that.
The amount of money that's been raised in the past, several months is insane. The amount of money that's flowing into these startups.
But I really feel like it's more legitimate money this time. It's not only retail. I think there's some significant players joining and entering this space that have diamond hands. I mean, just naturally have diamond hands.
Yeah, I mean, it depends on the project. I think like with I always mention Compound, but Compound had those early investors. They're basically sitting on so much money and they haven't even touched it. So I think it really depends on the project that they're investing in and who's investing it. But a lot of these really good projects, the early investors are just like, I'm going to sit on this until like 10 years down the line.
And that's really how I vet my projects anyways, though, is, like for SHIB, for example, there's a lot of retail money in right now. So I'm not nearly as bullish because when it drops, you're not going to have time to get out, right?
Yeah.
So, you have to be smart. And I made a post on CCT yesterday about how, as you start seeing this type of meteoric rise, there's no discipline in these markets. Everybody in there now is there to make some money. And they don't care if it's 15% or 100%. They just want to sell and make profit because they get too scared. And I don't blame them, right? It's the crypto market. That to me is retail money and retail investors only. But what we're seeing, like what you just, anyways, long of the short is that there's significant players now. And this goes back to that question I asked earlier about that. Anyways, go ahead.
Oh no, I think we're probably gonna wrap it up. I think Tushar had somewhere to be.
Tushar wants to be right here. Don't let him fool you. He was just trying to be polite.
He's a busy man. He's got
told him 2 hours. We're going for 2 hours.
But yeah, I think we should wrap it up. The persistence token, you guys listed on Ascendex not too recently. If anyone's interested, actually, how did that go, real quick? Okay, because we were actually communicating with you guys when you were listing. So,
all right. I didn't know that. I mean, things went, quite well. I think, I guess much better than expected. I think the big thing for us is now just working to, like Joe said, a lot of the institutional folks actually have diamond hands, and those are the kinds of folks that you want to be supporting you as well. So I would say part of our investors are like that. But over a period of time, and this is a journey that a lot of projects that did not from the outset raise from Silicon Valley have to go through, where you sort of institutionalize the project more and more and get institutional exposure. And so essentially that's what we're trying to do. So as a byproduct of that, or in order to achieve that, we're working to improve the liquidity for the token and those kinds of things. And so that's a work in progress. But yeah, from my perspective, I've seen about one bull market, one bear market, another bull market. So we've seen about 1.5 cycles, and to me, it's a fascinating industry, super interesting, super high paced, and it's an absolute privilege. So from my perspective, I want to just keep hustling, keep doing, And pStake is not the first or the last product that we're launching. Our goal is to just sort of continuously keep spinning out products. The way our organization is structured is to support that as well. So we have horizontal business functions. So things like research, marketing, business development, growth, compliance and finance, design, technical writers. They're all horizontal functions. And then for each of the products, we have a separate technical team. So whether that is Comdex, whether that is Audit.one, which is our mining business, or POS mining business, or whether that's pStake. So we can do things in parallel. And again, over a period of time, as we scale up, as we hire more people, our goal is to sort of, I want these companies to sort of run independently by like mini CEOs and mini CTOs, while my co-founders and I sit at the management level. So again, the goal is to sort of do that again, very similar to what Terra has done, where now they have so many products that are kind of flowing out from the same team. So we kind of want to follow in their footsteps.
Yeah. So the pStake is just the first, or not the first. I guess you guys had the commodity market and stuff. So the pStake is one of the first starts.
Crypto-native products.
Yeah, exactly.
Yeah. But we have tons of ideas in terms of things can be built. And so we're hiring more and more people from like traditional financial markets as well, who have like specific knowledge on very specific products that exist in traditional markets but don't exist in crypto, and just try to make them kind of crypto native, DeFi native, so that they understand some of the specific problems or specific opportunities that exist within crypto, and then try to replicate them by creating like a tech team around around these finance people.
Tushar, I've heard enough. Just here, take my money. Like, just tell me what to do. Like, literally, just tell me what to do. Can you be my dad? Like, that's a real question.
I'm sure you guys are absolutely kidding as well.
But if there's not, I'm still cool.
But yeah, I mean, thank you so much, guys. Joe, Giorgi, it's been an absolute privilege and pleasure. Joe, you definitely lifted my spirits up. I didn't mention it to the audience, but it's been a pretty hectic and tough day. So thank you for that.
You lifted our spirits by making the bull market at least a month longer today. I mean, well done.
Yeah, absolutely, man. Put my bull.
Absolutely. Yeah, you see the logo on the top of the screen. I always get confused. It's right next to you, right? So screenshot, put it next to your desk every time you use it. That this thing's going wild. All right. Well, Giorgi, any final closing thoughts here from you, man?
No, thanks for joining us, and I hope this was informative. This was, our audience is just starting to get into DeFi and stuff, so it was very informative, and I hope you guys check it out, Persistence.one. Their token is XPRT, and follow them on Twitter and everything. Thanks for being on, basically. I really appreciate it.
Absolutely. Thank you so much, guys.
Before we hop off, tell us where they can find you personally too, so maybe they can follow you on Twitter or whatever. What are your names?
Yeah, so Twitter is best. So it's @ my first name and 307. So @ Tushar 307 is my handle. But if you search for my full name, you'll find me as well. Twitter is the best place. Yeah.
Cool. And the website, as Giorgi mentioned, is Persistence.one. And check it out, folks. Lots of good things happening. All right, Aurox Nation, we will see you next time. Giorgi with his face tattoo. It's only every time it goes up, you get closer and closer. And I know the community is getting more and more excited. I did see we had a black or blue ink question. We'll figure that one out at some point. But nevertheless, we'll see everybody soon. Tushar, thanks again for joining us here on Aurox Live. The Aurox Nation appreciates your insight and what you guys are doing for the crypto community. Way to take care of the cryptoverse, bro. It's an honor to be able to sit here next to you and have this intelligent chat that I'm not capable of, but I pretend well, I think. Anyway, so till next time, everybody. We'll see you soon.
Thanks, everyone. Thanks.
Thank you, guys. Thank you.